Hey, it's Rob Booker for IGUS. IGUS is a leading Forex broker. Here's the week ahead. First of all, we might take a look at the economic calendar. There's a couple things I want to focus on. I don't usually care much about U.S. home sales, but with the S&P 500 and the stock market making new highs and things seeming to be a little bit toppy and the dollar yen maybe at a precipice right now, I'm going to focus on U.S. home sales. And in a moment, we'll talk about the bullish and bearish case for the U.S. dollar, Japanese yen. We've also got German CPI coming out next week as well, and that's going to put, well, actually, we also have the Eurozone CPI, and that's going to put the Euro-US dollar in focus as well. So turning to the charts here, we've got the US dollar, Japanese yen, which has been doing actually reasonably well over the course of the last little while. So this is a daily chart. And what I want to do is I want to look for what we might expect if the US data starts to soften a bit and what market participants might expect given the possibility of movement in all these different directions. So let's say that housing starts coming a little bit weaker than expected. Let's say that US GDP starts to show signs of slowing. Let's just paint that picture now. All trading involves a substantial risk of loss and is not suitable for all traders. Past performance is not necessarily indicative of future results. And with that said, let's do a bullish and bearish case. Let's look at both scenarios here. So if you draw a trend line across the dollar yen on this daily chart, what you see is we're right on the edge here. And I have noticed over the years that when you get a real sharp reversal off of a trend line, it's pretty clear. You get bullishness when it drops to that line. But when you get those small indecisive candles or bars on a daily chart, on a trend line, there is the risk that we slide right through the trend line sideways a bit and then head down. Whether or not this upward trend is intact isn't as important as this very next phase. So for the bears, to keep in mind, we're looking at a level like right around 108. If price can fall below and stay below 108 for a full 24 hours, full daily candle, maybe 2 daily candles, that's bearish. And that puts other levels in play like the previous support down at like 106.50 or so. All right, let's make the case. Let's look at the alternative scenario here if we get price moving up. So I'm just going to erase if I can. I don't know, can I erase everything really easily? I can. This is great. Look at that. Never used that feature before, Justin. And we got that. All right. On the upside, the bulls. Listen, there's a case to be made for dollar yen bullishness. If the S&P 500 continues to make brand new fresh highs and break records, that's bullish for the US economy. That's bearish for the yen, positive for the dollar. But we've got to break through and stay above 109 24, 48 hours, even a full week. So watch for the data to come in hotter, higher, better than expected, and look for 109 to stay. What was once resistance becomes support, and that puts in play 110, 111, and then a really historically important level that once it's hit, kind of price bounces around 112. So if we turn our attention to the euro, next week we've got that German CPI coming out. And what I want to focus on is, if we could draw a little bit here, what I want to focus on is this low that was put in place back at the very beginning of October. And this low down here in the, just below $1.09. That's a level that we want to keep in mind if the German CPI number, let's say that it beats expectations either way. Let's say that it's positive or negative much more than expected. The euro's likely to react to German numbers because that kind of sets the tone. So let's make a bullish and bearish case for here. If we break below $1.10, which is a super important level, that puts in play a 100 pip move down to $1.09. And of course, that's not for sure, but that's a bearish case scenario. If that level's broken, then the bears have control. And if $1.09 is broken and it stays broken for about a week, you have to consider that there is a potential drop down to other support levels 300, 400 pips lower. Now, if the data comes in better than expected, I'm not a bull until I see a brand new higher high printed above, let's say, this is an old favorite number actually, $1.1150, 1.1150. If that level is broken and we stay above that level for 24 to 48 hours, that's going to put in play levels that we've seen like 112.50. And then, well, that's really the one I would look for next, is a 100 pip move up to that level. And that's the bearish and the bullish case for the euro. So we'll be in touch in a week or so. Enjoy coming to you, enjoy doing these videos. Leave a comment below if you want to get in touch. Thanks to IG for sponsoring, IG US for sponsoring this video, and we'll see you next time.